Hi, good morning. It is March 19th. Just a weekly update here, 24 continuation of the bull run. Like last week, I put in this was slide 17, and we got our catalyst, right? I often look for a catalyst, things to happen. Um, you know, PPI came in hot, CPI was a little hot, and we are getting our pullback in semis, right? But either way, I'm not selling long terms, and I'm looking more under the surface. Like China, right? This was last week's slide, um, and we nailed it. So you can see where was it 1.6 versus 1.1, right? Um, Now there's no way to spin this and say, hey, this is good, but it's not as bad to me as it reads, because we're still kind of flat. So I agree that it's not good news, but I don't think it's as bad as it reads. However, when you are continually running straight up and priced to perfection, something like this can easily cause a pullback. And, it has. Now, one of the things that I find with newer traders is the hardest things for, well, I mean, everybody, not just newer traders, is just be patient and wait for A plus setups. And how long have I been telling you guys that a pullback was coming? It's been a while, right? It's like 3, 4 weeks in a row. I'm like, guys, a pullback's coming. A pullback's coming, right? I told you AMD was way overvalued, and then I broke up and sold AMD, right? Like I was done. So with that knowledge, it's like, well, if AMD is super overpriced and me, the biggest fan of AMD, is selling, well, what does that mean? That means, again, we're setting up for, in my opinion, a pullback, right? Um, this is my Twitter. This is me telling everybody, I love AMD. She's my baby. I've been telling everyone since 2018 to get long and hold. Well, I'm taking it off. So for everybody that's been trading for a little while, would you be willing to take a $2,300 gain, 2,300% gain on a position since 2018, right? You break that over 5, 6 years, it's pretty nice return annually. Um, so this is my buddy. I'm telling him, hey, this I sold from 2018. This tells you where we are, right? We're pretty extended. Now, this is just me telling everybody, hey, when AMD short comes around, I'm super focused on this thing. Like I am super focused. And I was saying, hey, look, I'm going to try to take AMD back below 185. Just looking at the numbers over and over makes me want to keep a short on it, right? And you can see the timestamps. This is my whole plan was I'm shorting AMD. I'm continually shorting pops. I'll be continually shorting AMD. Um, and this is what the chart looked like, right? Now, did I catch the top? Did I short when I sold? No, I didn't. Um, I was waiting for signals. I was waiting for an A plus setup, and and we got it, right? Now, the thing to remember about when you're getting these moves, a lot of you guys do what I call stepping over pennies. I'm sorry, stepping over dollars to pick up pennies. And so me and my buddy were trading this short, and he said, "Hey, I nailed the top with you." And I said, "What's your cover point?" And he said he already covered right here. And when I get a trade that I'm like, "Look, I really think we can get some range out of this. I'm just going to continually short pops on AMD, right? I'm not going to step over pennies. I mean, step over dollars to pick up pennies. Like I'm going for the home run play." Um, and I said right here, look, I'm willing to risk everything. I'm willing to risk all gains today to take this to the bigger move. Now, don't get me wrong, I was covering and shorting, right? That's called recycling. That's what I call recycling. I'll cover on dips, short on rips, right? That's normal. But you need to play this thing when you get these A plus setups. I mean, you got to swing for the fences, right? So One of the things, if you guys notice, if you go look at my journal, look at the size that I was trading in this, and that's with my smaller account, right? So I'm trading even bigger with my larger account, and this is what I'm talking about being patient. It's like if this was the only trade I made all year, I made more money than most people in the world make, right? Um, so again, last week it was kind of slow for me. It was by design, going in on these bigger gimme trades like AMD short. And what I've told you guys week after week is be ready for the pullback. I'm shrinking down what I'm trading. I'm going bigger on better setups that I like. So, how many of you guys are patient enough to wait for these setups and then confident enough to go in with size? One sec. Um, Morning, Charlene. And so this is what I want you guys to understand is you need to be prepared for anything the market throws at you, long or short, right? I was prepared. If you lost money last week, or if you're losing money this week, you know, we have to ask ourselves, do I need? Has the market moved its cheese? That's the phrase that I'll often use. Um, Sometimes I'll sit and watch. Sometimes I'll take small stabs at it, and then sometimes I go big. Um, and AMD being overvalued where it is up here near these 200s for me is a great opportunity to continually short against until we get the pullback in the markets and people begin to um, see what I call the true value of AMD. Now, if AMD comes out and they change and they have an earnings report where it says, hey, we've got this new AI chip and this and this and this, and they say, hey, we're going to pull in $2 to $5 billion per year off this chip, then that will change the value of it. But as of now, it's still overvalued where it is right now. Um, so now what? What do we do? Do we buy the dip or do we play it safe? Now look, I made this on over the weekend, so keep that in mind. So I was willing to try to buy the dip down here at this 21 because we just hit it 1, 2, 3, 4, 5, 6, 7, 8. How many ever times we hit this, right? So I would think we would initially bounce off of this. So you guys remember, I'll always say, hey, the first hit, I'll take a shot. We hit again, it's like 50-50. That third hit, I'll never play though, right? Now this means I'm still willing to take shots here and there to the long side. And I still believe there's going to be plenty of companies that will get love as the market goes down or sideways, as semis begin to cool off, as the AI space begins to calm down a little bit. I think money will flow into other companies, and you can see right AAP. Since March 1st, we're up 24% on our AAP long position, right? And in contrast, right, um, the SPY is not. So MMM, for example, they got an upgrade today, right? We're up 14%. um, there's a bunch of others. PayPal's up, C's up, CPS is up a little bit. But I think you're going to get a lot of love and other names. But again, remember, where are we in this cycle, right? In March, we traditionally get some weakness. So the shots to my long side will be smaller and have much tighter stops, right? I'm playing to the long side very tightly. That's the best way to put it. Now, one of the things I do want you to remember is this was a slide from last week as well. I still am a bull overall. just because we're getting a small pullback, or I think we're going to get a small pullback, or that we have companies that are overvalued, doesn't mean I'm turning into a bear. I'm not. I still believe we're going to continue this bull run. I believe there's stuff to look at besides the big dogs that have been pushing us up. And this is just one of them. China further signs of bottoming. And I've underlined down here what is noteworthy is the index has bottomed at the key support in quarter one 2024 and is in the very early staging of reversing its multi-year downtrend. So again, JD had an amazing earnings report and announced some buybacks, and I'm extremely tempted to get into some JD that I'm not in right now. But I'm so heavy in Baba, it's like I think both will work. But anyway, the reason now that I'm going to talk to you about a continuation of the bull run is because we're in the midst of a pullback. The reason I was talking to you guys about a pullback coming is because we were in the midst of a bull run. So I'm going to be telling you guys forward-looking things so that you know what to expect in the future, not what's happening right now. Because in the market, you don't have to be too forward-looking. If you're just a little bit ahead of the crowd, you're going to make a lot of money. Now, this is from Bank of America, but you can see the trough is starting to turn here. We're starting to get this global wave signals positive for equities and starting to turn up. And one of the most interesting, or one of the best graphs that I wanted to show you was what I've been telling you guys. These others are going to start catching up, and you can see the Magnificent Seven minus Tesla, because they suck, is this blue right here, is this blue, dark blue on the left side. But you can see the light blue is everybody else. And look, do you see how we're starting to catch up, right? So we're down. Now we're starting to catch up a little bit. So what does that mean? Well, that means money's going to start flowing into these other names, right? And that's why you've been seeing money to begin flowing into these other names. Because why? Earnings runs the markets. Now, dividend yield is relatively inexpensive versus history, right? So I have a lot of stocks that are dividend yielding stocks, right? Like 3M. They are paying 5.75%, 6% dividend, and I get a chance for my stock to go up. And I have a few of those, right? And why? Because they are presenting valuable plays right now. They're undervalued, meaning they're cheaper, right, relative to history. So this again is stocks that are under the surface. Now, one of the things to watch is, I told you guys beginning of the year, margins are going to start really expanding, and they have. Well, next comes the demand delivery. So here, I just want to read this slide. Margins bottom, next comes demand recovery. The S&P 500 posted an 80 basis point rise in EBIT margins, which is earnings before income tax, year over year. And I told you it was going to be 70, so it's 10 higher, which occurred without much boost from sales. This is consistent with the typical cadence of earnings recovery, where margins usually bottom before sales start to accelerate. Once sales start to accelerate, margins typically improve even further with better operating leverage. We see two major headwinds that weighed on earnings last year reversing: manufacturing demand and cost. So the reason manufacturing demand was a problem was we went through a point where we couldn't get enough parts. We couldn't get enough of what we needed. So we all started over ordering, right? And then we had to work through that inventory. So like GNRC is one that I'm long-term in. They over ordered and they had a lot of inventory they had to work through. A lot of the, like VFC, a lot of these companies had too much inventory. So our goods manufacturing represent about 50% of earnings, right? And but just 20% of the economy. Hence, the post-COVID shift from goods to services resulted in an EPS recession despite above-trend GDP. But we see continued size of a manufacturing upcycle, signaling an end to the third longest manufacturing downturn in history, right? 1, 2, and 3 right here. Inventory levels are now just back to normal. So look over here, right? So we were the COVID problem that we had in this bottom right. We over ordered, and then we stopped ordering, right? And now we're coming back to here, so we'll probably pop up or over, and then we'll get more looking like this, a more average inventory levels. So inventory levels are back to normal. Exhibit 10, a restocking cycle could be next, right? And early indicators, Korean exports, rail volume, suggest a manufacturing upcycle ahead. Historically, when the manufacturing PMI has been in expansion, the S&P 500 EPS has grown 12% on average on a 12-month basis, right? So now what I'm expecting and what Bank of America is expecting is, uh-oh, D-Band screen stuck on 3M. Is the screen stuck for you guys? No. Yeah, just refresh if it's stuck. So, what I'm trying to explain to you guys here is what's going to be happening in the future, right? Um, so right now it's like, all right, yeah, we've come in, we've done what we've expected, right? So I did that in the beginning of the year. I said expect margins to start expanding. That's going to help earnings. Earnings are going to come in nice. We're going to continue this bull run, buy these dips. Okay, little recessions. I mean, a little pullbacks coming right now. I am short. I'm getting short. I'm selling some overvalued companies, but I'm still a bull, and I still think that we are going to continue up. Will we have a pullback? Absolutely. It's normal. It's normal to have these pullbacks. Um, it's your job to manage your position so that you do not lose more money than you made on the push. And the way that I do that is through sizing and taking much smaller bets and um, shrinking down the amount of trading that I do, right? And only going big on A++. So, where is the equity sentiment today? Well, the net message of investor sentiment framework is neutral on U.S. equities. Bull markets end with euphoria, and today euphoria has been ring fenced to themes, right? So we're all going to lose all of our weight, and we're going to have AI do all of our work for us. So we're going to be the most in shape, lazy people in the history of the world, right? So sentiment has warmed up on equities since mid 2023, driving our slightly lower level of conviction in an up market, but is nowhere near bullish levels of the prior market peak, right? So that means we still have legs. And what they're showing here is, look where we are, right? We're simply in the middle of the pack, nowhere near these high points. So there's a lot of legs that we have to run us up even higher, okay? And long only funds, hedge funds, relative exposure to cyclical versus defensive sectors within an S&P 500, you can see it's low, right? So anyway, there's a lot to do. Now, the ideas for this week. So this was put out on coming into Monday, so I'm going to have to adjust some of this. For this week, we have a lot of bearish looking charts. If we are weak, we have plenty to choose from. Well, what do you think my favorite chart is for the weakness? Well, it's AMD. Surprise, surprise. So what do you think I did with AMD yesterday on the pop? I'm continually shorting pops on AMD until I get stopped out. So on the bullish side, I'm willing to try some names off of pullbacks levels. So I am still in AXP. I took some AXP yesterday, profits. NVIDIA, now the thing to remember about this NVIDIA, the reason that I was willing to buy NVIDIA was because I was buying before the event, right? So on NVIDIA, if you look at the NVIDIA chart, the play for me was to play into the event, which was yesterday, and that event is over. And when you have these events like this, what happened to PayPal stock once they had their event? Do you guys remember? I said, "Ooh, let's buy some and run it into the event." Do you guys remember what happened to PayPal stock once they had the event? Yeah, it's sunk, right? And this is what you call sell the news. This is typical. This happens a lot. The only time that you don't sell the news is when they put out something new. Did Nvidia put out something new? Did anybody watch the Nvidia event? Basically, it was a 2-hour explanation of how they glued two of their chips together to make a bigger chip. And, you know, they added some memory and it's ready to go, right? Um, and so, is it this technological breakthrough? Not really, but it's good. I mean, it's a good thing. I think it's great. It's going to provide, better. What was it? Did he say trillions? Better computations for us, but it's not that big of a breakthrough. There's nothing new about it, and so it's a sell the news event, in my opinion. And I think Nvidia is coming down, right? Now on Netflix, again, this was simply a retest of the breakout. So if you pull up the Netflix chart, you can see this huge red candle coming down and retesting this breakout. I was willing to take a shot at, right? And I was able to sell and take profits into this. If I get trail stopped out the rest of this, that's fine. But these are just small shots that I'm willing to take on on companies that are setting up in perfect scenarios for me, right? So am I willing to try Nvidia today? If Nvidia does give me an opportunity to buy down at the lower Bollinger Bands around 850, maybe. Yeah, I'll take a shot at that. Am I willing to try it right out the gate? Probably not. It's at what, 865? So I mean, you could. One that I may take right out the gate is Tesla. Tesla had a really strong day yesterday. Was flagging out, holding up real nice. I would expect at least an attempt back to do the gap close, but I may not trade a whole lot today. What's happening tomorrow, guys? Can anybody tell me what's happening tomorrow? Is there news tomorrow? Well, it's actually starting today, right? And today, Tuesday, yeah. So, you got the FOMC, you got the earnings, the interest rate announcement, right? You got the Fed stuff going on. So, is there a lot of people that are willing to put on a lot of bullish positions right here? With CPI coming in hot, with PPI coming in hot, with semis selling off, right? I don't know, right? And again, this MDGL, again, the chart has changed, right? So yesterday I played this MDGL, but I'm still willing to play MDGL, but the chart has changed. You've got more people trapped to the long side now, so I'll probably wait on this. So a lot of this is from Saturdays or Sundays put together. But here's your inside weeks. A lot of them are breaking down today. And so there's a lot of bearish charts that you can choose from. For me, I'm going to be managing AMD right out the gate. I still have AXP. I still have some Netflix. I'll set those. I've already taken profits in them, so I'm going to set those at hard stops. And with that being said, is there any questions on this? If not, I will stop the recording.